For years, it felt like the battle lines were drawn. On one side, the giants of traditional finance. On the other, the crypto pioneers, a war for the future of money itself. You had Bank of America, an institution that's been around for centuries, versus Ripple, the Silicon Valley upstart. Everyone was waiting for the final epic showdown. But what if I told you the war is over? And it ended in a way nobody saw coming. The news that just dropped changes everything. Bank of America isn't gearing up to fight Ripple. It's partnering with them. So in this high-stakes game for the future of digital money, who really won? Did the banking giant just swallow its competition? Or did Ripple just pull off the biggest Trojan horse in financial history? Let's break it down. The financial world just got a shakeup that almost no one predicted. In a move that completely flips the us versus them script, Bank of America, the second biggest bank in the US, isn't fighting Ripple. As of July 2025, it's actively using their technology. Specifically, the bank is now using Ripple's US dollar-backed stablecoin, RLUSD, for its internal payment systems. Let's be clear about what this means. This isn't a small pilot program or some vague press release. This is a major operational shift. We're talking about one of the largest banks on Earth choosing to run its money on rails built by a crypto company. For years, we've heard the big banks talk about blockchain like it was a science experiment they were keeping at a safe distance. They were supposed to be the competition, building their own systems to keep crypto out. Instead, they just opened the front gate. A pillar of the old financial guard has openly admitted it needs the new guard's technology to stay competitive. The question is no longer if big banks will use blockchain, but whose they will use. And for Bank of America, the answer is Ripple. This decision wasn't an accident. It was a calculated move in a fast-changing world, and it forces us to ask a huge question. Why would Bank of America choose a partner instead of building its own competitor? Section 2, Bank of America's pivot, from caution to collaboration. To get why this is such a big deal, you have to remember Bank of America's public stance until now. For years, CEO Brian Moynihan and other executives were the voices of caution. They were constantly talking about the risks of crypto, the danger of deposits leaving traditional banks, and the need for perfect regulatory clarity before they'd make a big move. Their game plan seems simple. Wait and see. Let regulators in the US and Europe figure everything out. Let the crypto companies fight amongst themselves. And once the dust settled, the big banks would swoop in with their own perfectly compliant solutions. Bank of America even put out forecasts suggesting stablecoin growth would be slow, implying they didn't see it as an urgent threat. Everyone assumed they were secretly building their own walled garden, a private tokenized system, maybe with a few other banks. The thinking made sense. Why let a crypto firm control the new financial plumbing when banks could just build their own? But here's the thing. Building is hard. It's slow. It's expensive. And for a bank, it's a massive risk. Creating a global payment network from scratch is a huge undertaking, even for a giant like Bank of America. And while they were waiting, Ripple was building. It turns out Bank of America's secret weapon wasn't a hidden R&D lab. It was pragmatism. They realized it was faster, cheaper, and smarter to adopt a ready-made and battle-tested solution than to try and reinvent the wheel. They chose to buy the car, not design a new engine. And the car they chose was built by Ripple. So what did Ripple build that was so good a top US bank decided to use it? Let's talk about RLUSD and the ecosystem Ripple built around it. RLUSD isn't just another stablecoin. It was designed from day one to work in the highly regulated world of institutional finance. It's a regulated, one-to-one US dollar-backed digital currency, with a focus on transparency around its reserves. While other stablecoins have faced tough questions about what's actually in their vaults, Ripple has aimed to build trust with banks and regulators. But the coin is just one piece of a puzzle. It runs on the XRP ledger, a network engineered for enterprise-level performance. We're talking about a network that can handle thousands of transactions per second for a tiny fraction of a penny. That's the kind of speed and savings that gets a CFO's attention. And critically, RLUSD is not just a white paper or a promise. It's a live currency that is already proving its case in real-world applications, now including with Bank of America. Ripple's real genius, though, wasn't just the coin. It was the whole package. They've built an entire parallel financial toolkit. There's Ripple Payments for settling transactions in real time, Ripple Prime for managing liquidity, and Ripple Custody for securing the assets. It's a complete all-in-one solution, a bank in a box for the modern world. They don't just offer a currency. They offer the roads, the liquidity, and the vault. This is what Bank of America didn't just buy into, they plugged into it. Okay, so this is where the story gets really interesting. We have a banking titan and a crypto innovator locked in a powerful new alliance. But in this relationship, who really has the upper hand? Before I break down who I think is playing chess while the other plays checkers, if you're getting value from this analysis, take a second to hit that like button and subscribe. It really helps the channel get this information out to more people. So, who really wins in this war that turned into a partnership? Well, the answer depends on how you define winning. First, let's make the case for Bank of America. From their point of view, this is a brilliant strategic move. They get to skip years of expensive R&D and immediately plug into a cutting-edge blockchain system. They could offer their clients faster, cheaper payments without the massive headache and risk of issuing their own stablecoin. In effect, they're renting Ripple's state-of-the-art plumbing to supercharge their own house. And they get to keep the most valuable asset of all, the customer relationship. To millions of clients, it's still Bank of America providing the service, just better and faster. They get all the innovation without giving up their empire. Now, for Ripple's side. This is, without a doubt, one of the biggest moments in the company's history. Getting the official seal of approval from America's second largest bank is the ultimate validation of their entire strategy. For years, Ripple has argued that crypto's future isn't about burning down the old system, but about rebuilding it from the inside. This partnership proves their model works. Bank of America's decision is a green light to every other bank on the planet. Ripple's tech is safe, regulated, and ready for the big leagues. And this isn't just about bragging rights. It's about utility. Every single payment that Bank of America processes with this system drives activity on Ripple's network. The XRP ledger, which supports RLUSD, uses the digital asset XRP to pay for transaction fees. Bringing on a partner with the massive transaction volume of Bank of America could lead to a huge and sustained increase in the network's use, proving the value of the entire ecosystem. This story is bigger than just Bank of America and Ripple. It's a preview of the future of the entire global financial system. The whole banks versus crypto narrative is officially dead. We are now in the era of hybrid finance. This partnership creates a roadmap. Other major banks in Europe, in Asia, everywhere were watching from the sidelines. Now they've seen a highly respected, conservative institution like Bank of America make its play. The question for them is no longer if they should integrate blockchain, but how fast they can do it to avoid being left behind. This signals a great convergence. The world of traditional finance has the scale, the trust, and the customers. The world of crypto has the technology, the speed, and the modern infrastructure. Neither one can build the future alone. The winners of the next decade will be the ones who can bridge these two worlds. For you, this means the digital dollar revolution is happening now. But it might not look like a dramatic overthrow of the system. It will probably look like the same banking app you use today, but with payments that clear in 3 seconds instead of 3 days. It will be powered by crypto technology, but delivered by the names you already trust. The real innovation is happening on the back end, with companies like Ripple building the new rails for the global economy. So who wins the stablecoin war between Bank of America and Ripple? The truth is, they both do. Bank of America gets the modern technology it needs to stay on top. Ripple gets the institutional validation it has been fighting for since day one. The versus in the title has become a strategic and. But don't think this is a story about everyone holding hands and getting along. This is a story about power. The real winner is the idea of a hybrid financial system where the old guard and the new guard are forced to work together. But the balance of that power is still up for grabs. Is Ripple happy to just be the new, efficient plumbing for the old banking system? Or, by embedding its technology in the heart of traditional finance, has it put itself in a position to one day become the new heart of the system itself? The war isn't over. It has just moved to a new battlefield. What do you think? Is this a genius move for Bank of America? Or did Ripple just capture the king on the financial chessboard? Let me know your thoughts in the comments below. Thanks for watching.